Welcome to The Stock. My name is Don from the Premium team, and today I'm joined by Matt, Head of Clients. Today we're talking about Lynas Rare Earth Minerals and Google, or mostly known as Alphabet in the share market. Matt, tell me, what's your stock?
Thanks for having us on, Don. The stock I want to chat about today is Lynas Rare Earths, ticker code LYC. And it's a good news, bad news story. So the good news, in their quarterly update to the market yesterday, they announced almost a 70% increase in revenue year on year, which is its best result in around 4 years. And then secondly, prices are surging. So the price that Lynas are getting for their rare earth oxide is around $98 a kilo, up from $60 a kilo last year. And that's being driven by Western customer demand who want supply outside of China. But here's the catch, the stock fell around 9% during trade yesterday, and for two reasons. Firstly, production came in short of expectations again. Yep. They're having a few issues at its Mount Weld mine. Mm-hmm. And then secondly is the big one, the Malaysian expansion project has blown out to almost 290 million in expected cost, up from what was 180 million originally planned. And that's really critical, as the Malaysian expansion is key to their pitch as the Western answer to China supply. Mm-hmm. So the market's wondering how much more cash do they need? When is it going to turn a profit? It's not in production until 2028. So strong demand, messy execution. That's Lynas right now.
Cool.
What's the stock you're watching, Don?
I'm watching Alphabet today, mostly known as Google for most people. Ticker code GOOGL. Alphabet released earnings report this morning, which was an incredible headline at first. They published $9.11 per share in earnings, over expectations, which were under $3, which is a beat of over 200%. So stunning news at first. Yet the stock is down 5% from its yesterday, including the overnight trading session. And that's because everything of the reported earnings is a paper gain and not a profit. Google booked a $99 billion markup on its latest investments, and that's including its stake in Anthropic, which a lot of people would probably know as Claude. Strip that out and earnings were roughly in line. So what looks like good news here as well in the first place doesn't always mean that the share price is reflecting the same. So the reason is spending. Google raised its 2026 investment budget over $200 billion in total, so insane numbers here. And the market is nervous about that spending and when it's going to pay off. Underneath, though, the business is firing from all cylinders, really. Cloud revenue up 82%. And Gemini, Google's own AI, now at almost 1 billion users. That's stunning numbers. All in all, I think it's fair to conclude that Google is a strong business, flattered profits, and the market is a bit nervous. So that's Google today.
Kimi K3 is topical right now with the new model release recently, creating a lot of noise in markets. What's your thoughts on that?
It is. And our market analyst, Tony Sycamore, actually uploaded a great video about it most recently on our socials. So dig into that if you want to know more. But my take on it is, obviously there's a huge battle going on in the world of AI, and China has just released that most recent AI model of Kimi K3, which a lot of investors might see it as a threat to Google, Anthropic, Claude, ChatGPT, OpenAI. However, this reminds me, a couple of months back, the world was in shock when everyone heard about DeepSeek, which appeared out of nowhere and seemed to be very sophisticated large language model and front-running ChatGPT. A couple of months down the line, we can all conclude that OpenAI and Anthropic have both kind of manifested their standpoint in the market. So I would see it as something to watch out for, definitely monitor, but play the long game, and companies like Google are well embedded and positioned in the market to be successful, I think. And that's all the time we have for today at The Stock. For all news, stocks and markets, head to ig.com/au.